The Dow Jones plunged 800 points today. It was a bloodbath. Investors are reeling. Fortunes have been lost. This is not a drill. The market is crashing. The closing bell couldn't come soon enough. Traders, eyes bloodshot, stared at their screens in disbelief. The sense of panic was palpable. Whispers of recession and depression filled the air. This wasn't just a blip. It was a full-blown crisis. The S&P 500 and the Nasdaq followed suit, plummeting 8.5% and 9.2% respectively. Tech stocks, once considered invincible, were hit particularly hard. Apple, Amazon, Google, all down by double digits. The fear is contagious, spreading like wildfire through the financial system. This is not the time for complacency. This is a wake-up call. The market is speaking and it's time to listen. The question on everyone's mind is, how far will it fall? The writing has been on the wall for months. Inflation has been spiraling out of control. Supply chains are still snarled. The ongoing trade war with China continues to cast a long shadow. These factors have created a perfect storm, pushing the market to the brink. The Federal Reserve's attempts to curb inflation with aggressive interest rate hikes have backfired. Higher borrowing costs have slowed economic growth. Consumer confidence has plummeted. Businesses are pulling back on investment. The situation is further exacerbated by the ongoing energy crisis. The war in Europe has sent oil and gas prices soaring. This has added fuel to the inflationary fire and squeezed household budgets even tighter. Uncertainty reigns supreme. The markets hate uncertainty. And right now, the future looks very uncertain indeed. The question is no longer if a recession is coming, but how bad it will be. Financial experts are sounding the alarm. This is a serious correction, warns renowned economist Paul Krugman. We haven't seen anything like this since 2008. His words echo the sentiment of many on Wall Street. The market is clearly pricing in a recession, adds Janet Yellen, former chair of the Federal Reserve. The question is whether policymakers can act quickly enough to prevent a full-blown financial crisis. Her words are a stark reminder of the stakes involved. Even the normally bullish Warren Buffett has expressed caution. Be fearful when others are greedy, and greedy when others are fearful, he famously said. His words seem particularly prescient in light of the current market turmoil. The consensus is clear. The road ahead will be bumpy. The question is, how bumpy will it get? While many investors are panicking, dumping their stocks in a frenzy of fear, others are seeing opportunity. They're scooping up shares of companies they believe are undervalued, betting on a market rebound. This is a time for cool heads and a long-term perspective, says Cathie Wood, CEO of ARK Invest, known for her bold bets on disruptive innovation. She sees the current downturn as a buying opportunity for companies in sectors like artificial intelligence, robotics, and genomics. Indeed, not all stocks are created equal. While the broader market is down, some sectors are showing resilience. Healthcare, consumer staples, and utilities, sectors considered defensive, have held up relatively well. This divergence in performance highlights the importance of diversification and a well-thought-out investment strategy. As the saying goes, don't put all your eggs in one basket, but the question remains, is this the bottom or is there further to fall? Don't forget to like and subscribe for more updated breaking news.